Hey, Alex here again. This is a example problem for chapter 1. It is the accounting equation, and it's just a very basic rundown of assets equals liabilities plus owner's equity. So that's basically the fundamentals. That's what accounting breaks down to. So assets will always equal liabilities plus owner's equity. And that's why we had the debit credit system in place to keep that balance. And so this is just a very simple problem because we'll do different problems in different chapters, but I just wanted to kind of get the gist of each one. So Fred Johnson is the owner and operator of Great Photos. Now, Great Photos is a fictitious company, but in this case, it is real. It's a photography studio business. At the end of its accounting period, December, or I guess that's the end of that. December 31st, 2011, Great Photos has assets of $575,000 and liabilities of of $125,000. So right off the bat, we have our assets and our liabilities, and this is where algebra comes into play. Now, if you ever taken algebra, you may think, oh, when am I going to use algebra? Well, actually, in accounting, it's used all the time. That's like the biggest math you'll use. You won't use a lot of high-end math, just basic adding, subtracting, multiplying, dividing, and finding missing numbers. Using the accounting equation, determine the following amounts. And so we got to determine the owner's equity as of December 31st, 2011, and B, owner's equity as of December 31st, 2012, assuming that assets increased by $85,000 and liabilities increased by $30,000 during 2012. Okay, so this first one, how do we figure out owner's equity? Well, if we know that assets equals liabilities plus owner's equity, and they gave us the assets and the equity and the liabilities, this is how you set it up. You put the $575,000 on the left of the equal sign, the liabilities on the right, and then leave OE as your placeholder. So that in algebra, this would be like an X or a Y. You want to narrow it down, and so we subtract the $125,000 from both sides. Whatever you do to one side, you do to the other. See, 125, 125. And what that's going to do is it's going to leave the OE. And the OE is $450,000. So that is our owner's equity. By subtracting the liabilities from the assets, leaves over what equity should be. And this will help you. This problem really helped me when I was learning, because it set it up, because really accounting boils down to the two sides. And so whenever you do it, and the next example will be transactions. So in transactions, always have a debit and a credit. You're always affecting two things. And so this really helps visualize it. And then for the B one, assuming that the assets increased by $85,000 and liabilities by $30,000. As you can see, we have the $75,000 equals the $125,000 plus OE. But then we add in the 85 and the 30. You see that? Which will change our balance to the $660,000, and then $155,000 for liabilities. Still have the OE. And then what we now know is we can subtract from both sides the 155,000. And this is what's going to leave us with an OE of 505,000, as you can see. So this was a basic equation, a basic problem. I just wanted to, I told you I was going to do some examples, and I just wanted to do one that helped me out. And so, but if you have any questions on anything, feel free to ask. But maybe I could I'll probably try one more, but the next chapters we get more and more in depth. So this is just basically how the systems are. So thank you, I hope this helped. I'll see you for the next one.